So this is Hall Martin with the Investor Connect. Today we're here with Jeremy Arendt of Cottonwood Venture Partners. Jeremy, thank you for joining us.
Yeah, thanks for having me, Hall.
Well, great. I see you've opened up a new fund here in a space that's increasingly getting a lot of attention, which is the oil and gas space or the digital side of that. Can you tell us a little bit more about the Cottonwood Venture Fund and what you guys invest in?
Yeah, happy to. First, thanks for having me on. Really appreciate the time. Cottonwood was founded really as a result of what my partners and I had seen in the industry, which was that oil and gas, as an industry as a whole, was very far ahead, really throughout its existence in terms of mechanical technologies. But over the last few years, it fallen a little bit behind other industrial sectors on the digital side. So really, software adoption, and for several reasons, we thought that was going to change. Not least of which is that commodity prices had come down from 2014, forcing folks to be more efficient than they had been in the past. And then also the move to unconventional development really made oil and gas look more like a factory than the deep water kind of conventional oil and gas that we had seen in the past. So we thought things were going to change. And as we canvassed the capital landscape, we didn't see really any capital providers focused on what we would call the digital oil field. Entrepreneurs being technology companies would go to venture capital firms seeking capital to grow. But more often than not, those venture capital firms were not experienced in oil and gas and therefore unlikely to invest in it. The typical oil and gas investor, tends to want to write hundreds of millions of dollars of checks and invest in steel and land and not write $3 million checks and invest in bits. So we saw an opportunity and left our day jobs, as it were, and went out, really started raising money for the fund.
So, what sectors do you think are going to be the key ones for you? There's plenty of white space in the oil and gas industry for technology improvement, but what do you think the top 3 or 5 sectors are that you're looking at?
I mean, we're really focused broadly on the digital space. And so, for example, our first 2 investments, one is on the production side and then one is on the development side. Our first investment, a company called Ambient, they provide edge computers and a robust software platform to help operators automate and monitor their pump jacks. And then branching out to other forms, other sensors and automating other parts of the well site. So, we think that that's a very important part of where the industry is going to grow, is just optimizing existing production and really creating more efficient platforms on which to do that. Ambient's platform, often the replacement would be sending a pumper in a big truck out to view well sites versus just automating that process and centralizing that and being able to view that well site from Houston or Dallas or Midland or wherever else. Our second investment is into a company called Novi. And what Novi does is utilizes machine learning to help E&P companies develop better development plans or design better development plans. It helps companies determine where do I drill my next well, what zone do I land that well in, how do I complete that well, how do I space that well, and then run through a full development plan to optimize for NPV or EUR or minimize capital or whatever it might be. And we think that kind of broader, it falls into a lot of buzzword buckets, but that broader use of the data that we have in the industry and synthesizing that down into being able to answer distinct questions that before took a very long time to answer or just simply weren't answered and went on gut reactions. Utilizing that data to improve our operations and optimize our plans is going to be a very big part of what we invest in.
Well, it seems like IoT is an enabling technology in a lot of these applications. How do you see that fitting into the landscape?
Yeah, so Ambient will qualify as an IoT company, really making what would otherwise be, what we would call dumb iron pump jacks into intelligent automated machines. And so, look, I think we're going to see a lot of that. Really throughout the oil and gas industry. And that spans from E&P to midstream and really into downstream. Downstream is probably actually a little bit ahead in our view of where the further upstream market sectors are. But we see IoT as being a big part of what we'll invest in. We break it down really into 4 buckets. There's data and analytics, which we see as being the biggest. IoT and business solutions are probably tied as second. And then robotics and just full automation would be the smallest bucket. But IoT is going to play a big role in changing the oil field.
Well, I've seen a number of deals come through that were automating the back office side of the oil and gas industry. In particular, they were taking all of the county records and putting them online so you could sort and search it from a central location through the web, as opposed to physically going to the county office and making photocopies of different land structures to know who owns it, how do you negotiate the rights for it, and so forth. Where do you see that fitting in your fund?
Yeah, that look, I mean, the land side and just public data more broadly is a very messy space, and that lends itself, of course, perfectly to technology companies that can efficiently make sense of that mess. And so, what we're seeing a lot of is folks focused on utilizing machine learning to find errors or likely errors in public data, using natural language processing to try to determine, what does a lease say? Every lease is tends to be written a little bit differently. There are different words used for different meanings. And so being able to sort through that and automate that process with a high degree of accuracy is going to save the industry a great deal of time and a great deal of money, especially as you think about leases and land documents being some of the most important and valuable documents in the industry. Being able to limit the number of errors in understanding exactly what a company owns is going to be very, very valuable.
So, what can you tell us about the fund itself? How big it is? What size check you write? What stage you invest in? What is the criteria and parameters of your fund?
Yeah, so we're raising a $50 million fund. We had our first close in July of this year, 2017, and we've since made two investments, Ambient and Novi. In terms of what we look for, again, software focused companies that have existing revenue. So what we're looking for are proven products that have, call it multiple oil and gas customers paying on a recurring basis. And we tend to invest about $3 to $5 million per round, with saving a little bit for additional rounds in the future. What we really look for, incremental to kind of those check boxes, as it were, is of course, what's the growth profile of the company? How valuable do we think this is going to be to the industry? But also, how does Cottonwood add value? Part of us getting into this space is that we all have backgrounds in oil and gas. That's where our friends work. That's where our networks and connections are. And so when we approach a company, we don't approach it as much of a how neat is the technology as much as how does this influence the industry, and is the industry likely to adopt this? Helping entrepreneurs think through that and strategize around accelerating that. And look, I mean, part of that is thinking about, hey, company X is going to be a natural customer of this product, so why don't we all go meet them and see if this makes sense? And so that's really a big part of what we look at is, do we have the opportunity to add value to this investment?
Well, there are a lot of corporate VCs in this space, Schlumberger, Shell, Chevron, with just about everybody now. How do you guys fit or play or work with the corporate VCs?
Yeah, it's a great question. And look, those guys have done a great job of providing capital to this space and providing a playground, as it were. And we have, and we expect to continue to partner with a lot of those folks. In the ambient investment, Statoil and GE both invested alongside us and Mercury Fund. We've experienced partnering with those folks in the past. Have spent a lot of time with all of those groups. I really like the people there. Really like the value proposition of having them involved. And ultimately, we see all those guys as partners. They're after the same thing that the other oil and gas customers of the products we invest in are after, and that's becoming more efficient. They of course approach it in a manner of getting out of their competition by investing directly in those companies. But ultimately, that perspective is very similar to what the perspective would be of a company that doesn't have a corporate venture group. And so we see a lot of value in spending a lot of time with those folks, partnering with those folks, and trying to proliferate these technologies just more broadly into the industry.
Well, how much does the price of oil drive investment into this space? How much is really driving down or driving up efficiency, which means they have to drive down the cost, versus this is just a good place to invest in? So if oil went back to $150 a barrel next week, what kind of impact would that have on these companies putting in these technologies? Would it really slow them down, or would they be doing it anyway?
Yeah, it's a great question, and something that we obviously looked a lot at as we were thinking about this strategy. First of all, the downside of $100 oil is that folks are less focused on efficiency, right? And understandably so, reasonably so. They're focused on drilling more wells and extracting as much resource as quickly as possible. And so efficiency kind of takes a back seat to activity. In that case, that certainly, is harmful to our strategy because folks are less focused on that efficiency that our technologies drive. However, in that situation, oil and gas companies are also feeling more flush. And when oil and gas companies feel more flush, they tend to take more risks and they tend to focus on investing a lot more into the future. So we think that even if oil were to go back to $100, which we don't think it is, but even if it were, that efficiency taking a back seat is offset by folks understanding that times have changed and we need to invest, and now we have the capital to invest in being more efficient into the future.
So where do you see the industry going at this point? Is putting in new technologies to decrease the value? How much do you think it's going to move into other areas such as solar or biomass or alternative energies?
Yeah, so in our first fund, we're fully focused on oil and gas because that's where we see the most immediate opportunities and the most immediate need for capital. There's clearly a lot of capital out there in the clean tech sector, and a lot of capital have been put to work. Ultimately, what our view is that clean tech, alternative fuels, and so forth are going to have an increasing role in our society. Today, as we look at the landscape, the economic efficiencies of alternative sources of energy are just not up to par with oil and gas, and so we think oil and gas still has a long future. But as we see that transition, and as we see our alternative sources of energy becoming more and more economically viable, that is certainly a place that we may focus in the future. But today, as we look at it, oil and gas is still king. We don't see that changing in the near term. What we do think is going to happen is that oil and gas price is going to be a little bit maybe more range bound than it had been in the past, simply for the fact that unconventional development, really onshore U.S. unconventional development, has allowed us to very quickly either add production or reduce production, and that tends to just more quickly offset those market dynamics than the big multi-year deep water projects had in the past. And so what that leads to is maybe a more stable environment, maybe an ability to better judge investment decisions, but also should lead to great efficiency in the industry. And that efficiency over time will presumably continue to drive down commodity prices while still maintaining profits because we are cutting costs, but drive down commodity prices, which for better or for worse may further delay the economic viability of other forms of energy.
Well, that's a good overview. Is there any topics we haven't covered so far that you think people should know?
Oh, look, again, we appreciate you taking the time and appreciate the opportunity to be on your show, and look forward to listening into future broadcasts.
So what's the best way people should get in touch with Cottonwood? Is it the website, LinkedIn, or some other method?
Yeah, all of the above. You can go to our website at Cottonwood VP for Venture Partners. .com. So cottonwoodvp.com, or we're on LinkedIn or Twitter, or just Google us. You'll find us.
Well, that's great. Well, thank you for taking time today, and we'll hope to have you back for a follow-up on other topics that you've brought up today in this show.
Great. Well, thanks so much, Paul. We really appreciate it.
Great. Thanks.